Now next in single candlestick patterns is hanging man. So hanging man is a structure which will look similar to hammer. The only difference being with the position where this hanging man candlestick pattern will appear. So hanging man will appear following an uptrend and it is a bearish reversal pattern, meaning that the market direction will reverse after hanging man is seen on chart. Hangman, similar to hammer, will have a small real body and there will be slight difference between the opening and closing prices. It will have a characteristic long shadow which will be at least twice the length of real body. The color of the candle does not matter. However, if candle is red in color, then it indicates a higher potential of market reversal and an incoming downtrend. Formation of hanging man candle, it indicates that bears have now entered the market and they are trying to create a downfall in the market. Now in the figure, we can see that there is an ongoing uptrend, meaning that the bulls are in complete control. A hanging man candle is seen at the end of uptrend, meaning that now bears have made an entry and they are trying to stop the further up move. So following the hanging man candle, you can now see that there is an induction of downtrend and you see red candles forming one after the other. So this is how hanging man will behave in your trade setup. Now let's see how do I trade with hanging man. So hanging man is a bearish reversal pattern, meaning our trade setup will depend on the previous market trend, which should be an uptrend. While planning entry, our entry price should be close to the real body of the candle and stop loss should be slightly above the upper wick or the upper shadow of the candle.